Where can you make most amount of returns? Is it by trading or is it by investing in the stock market? Well, most people would say that if you are trading, you are not going to outperform the S&P 500. I would say that might account to most amount of people because of the amount of traders that fail. But if you are a successful trader, you are always going to outperform the market by a lot. And we are going to look at your life journey if you were just investing and working at a job, or if you were maybe working but also trading, learning how to trade to then become a full-time trader. This is something that ran into my mind when I was looking at my stock market returns. I was like, man, would I be better off investing my money? But the thing is, I do invest a lot of my money, but I know that most amount of returns and capital and money is going to come from trading. And that's what I'm going to explain in this video. We are going to go into the computer and we are going to see that not only percentage returns, but also monetary returns are always going to be better if you are trading and if you become a successful trader. So if you're now here at the computer, you can see that I drew a graph that indicates the percentage return by the amount of time that you have in the market. And of course, stocks
Stocks go high and then they go higher. They only go up. Stocks only go up.
Let's say that for stocks, you have kind of something like this. Moves down sideways a little bit. So it kind of trickles around, but the tendency is to go up. So you kind of have these type of returns. And this is in years, let's say years. So we know that the percentage returns that the stock market normally gives, let's say 10%. So this is the kind of returns that you could kind of expect from the market. But in trading, it's completely different because in trading, you are probably going to start off negative. And for the first year or two, you might be running around break even, a little bit of profit, then just maybe going above break even a little bit, just doing something like this. Here you're thinking, oh God, the market is completely outperforming me. Like they know what they're saying when they say that I'm not going to outperform the market. And then you keep going for your third year, but then you kind of start reaching consistency. And what happens when you reach consistency is you start getting consistent returns, and then your curvature kind of does something like this, and you see how fast this can catch up to the market. And then while the market is still doing something like this, you're getting this exponential curve that will keep going upwards. While the market keeps trickling upwards, you are getting good percentage returns, much better than a market. A consistent trader that maybe achieves 10% per month, he's getting 120% uncompounded per year. That's what the stock market gets in, like, let's say 8 years. So in 1 year, you are achieving what the stock market achieves in 8 years. But the thing is, the test of time is going to be this. Are you going to stick through these 4 years of not getting great returns? Maybe not, like most people won't. And that's why those people would be better off investing long term, because they're not going to reach this stage that is going to give them their exponential growth. But then let's look at another scenario, which is looking at the dollar returns from stocks and the dollar returns from trading. If you are investing long term, then you probably have a job and you're doing something like this. You're constantly investing more money and getting more money. The chart is going to be very similar to the one that we drew. And for trading, it's the same thing. We are going to start maybe down, break even. A lot of people might go a little bit more down, around break even, something like this. But then once again, once you start reaching that consistency, you can get funding capital, meaning you get an exponential growth in dollar return amounts from the comparison that you would have from your job. So let's say you get funding and all of a sudden you're making this, which is the difference between you investing consistently and investing in your education. All of a sudden, maybe you were investing $200, $300, $400 per month in the stock market, but you finally got the funding. So let's say you got a 100K funding. All of a sudden, you're making $5,000 per month if you have a 5% month, which means that you just made up 5 months of your work that you would have invested in the stock market. And then this keeps going. While you would be steadily investing if you were on your job, you are making more and more money from your trading accounts because you're getting more funding. And even if you're just having a 100K account, if you're getting $5,000 profit from every single month, you're making much more than if you were at a job and you were investing consistently and getting like 10% return per year. But once again, the devil is in the fact that most people will not reach this stage. And if most people don't reach this stage, it means that most people would be better off just investing long term. But us traders that take this very seriously, this is what we are trying to achieve. So time investing in our education, followed by maybe funding or investor capital, for then having this exponential curve that we would not have with this type of investing. And that's the difference between trading and investing long term. In trading, you might hit your exponential curve, which is what will outperform the market. And in investing, you simply have a more consistent growth built in. So it's all about risk reward. If you are trading, you have the higher risk of not achieving this exponential curve, but you also don't have this possibility of reward if you don't do it. So when you are investing, you don't have that much risk, but you also don't have the exponential curve of reward. And that's why I think that trading is very powerful. And that's why I'm sticking to trading. I also invest, but a lot of my time is dedicated to trading because I want to hit this exponential curve. And I know that I'm closer and closer to doing it. So even though my stock market returns are clearly outperforming my trading returns, it simply means that I haven't hit this exponential curve because I'm not making much money every single month. But once I hit this exponential curve, I will be making a lot more money than I would if I were just working for someone else and investing in the market. And that's what I'm playing, and that's what probably you are playing too. And that's what I wanted to explain when we are talking about stock market returns versus trading returns. Most people say you will not outperform, and I really do believe that you will outperform if you become a consistent, profitable trader. So I hope this helps. I hope this clears some of your mind, and I will see you Saturday. Peace.